Welcome to Capital Gains, Yahoo Finance's unique look at how U.S. government policy affects your bottom line. Now that we're in the middle of this lame-duck presidency for President Biden and getting a peek now at what a President-elect 2.0 Trump is also going to be doing based on the movement that we're seeing with his cabinet. So we're going to be checking that out. And something very interesting, DOGE, but not the kind that you're thinking, the Department of Government Efficiency, bringing Elon Musk into the fold of everything along with Vivek Ramaswamy. So there's a lot going on this week that we're going to get to. And later on, we're also going to be having a conversation with Puck News founding partner William Cohan, who will break down all of that with the guys. But first, of course, want to bring in the guys, my co-stars, Ben Werschkul and Rick Newman. So Ben, let's kick it off with you. Busy week. What's been on your note cards?
Yeah, so my note card, it's full of Trump appointments. We can talk about Matt Gaetz as Attorney General or all the ones. The one I want to the through line here, I think, for people to kind of think through all these is that these are loyalists. This is not a team of rivals. This is Trump going down the line and basically picking the most loyal person to him he can find for these roles. They may be qualified for the roles. They may have no experience in it, but that's the through line. And then the big one, which you mentioned at the top from an economic perspective, is Elon Musk and this Department of Government Efficiency. An important caveat for folks, this is not a real department. This is, at the moment, this is literally a Twitter account where you can send your resume to work with Elon and Vivek. That's real. They're doing that now. It's outside of government, so they are going to have this idea of basically figuring out something over the next year and a half to cut $2 trillion out of the federal budget of $6 trillion. So how that works really much remains to be seen. But what the dynamic I'm watching for sure is Musk clearly, and Ramaswamy to an extent, have said they want this to be disruptive. They're okay with that. Musk has talked about temporary hardship for the American people during this period. He's agreed with a tweet about how the markets could go real down for in his view, the short term. What I think will be really interesting to watch between now and then is whether Trump can get on board with that. Can Trump stomach unrest in any form to get to these goals? That's the big question right now, sort of on an economic perspective, with a lot more to come. Rick, what are you watching?
Well, it's getting good, isn't it, guys? I mean, isn't this kind of fun to watch? I'm watching all of the very predictable media and Democratic response to this, and it even, some of these stalwart, supposedly normal members of the Republican Party in the Senate, and they're like, Trump did what? And it's like, of course he did that. He's trolling everybody. Trump is trolling all of you. He's just sitting there, doing his thing. And I'm sure he's got his trust fund son, Don Jr., sitting there. Oh, we got to own the libs. We got to own the libs.
I mean, I will say this episode of America, it's doing a lot already, and it hasn't even fully kicked in yet. And Ben, I know that you were writing about, obviously this $2 trillion, cutting in federal spending, sounds dynamic. Everyone's like, well, his supporters are like, yes, change, but give us the breakdown, because there's the mandatory spending and there's the discretionary spending. But we talk about things like potentially, like some of the things that Trump said that he wanted that may not really jive with what Elon Musk wants.
Yeah, I pulled these numbers just so I'd have them ready for you. So the federal budget in 2023 was $6.1 trillion. Musk has promised that he says he can get at least $2 trillion of that out. What that overlooks is that $1.7 trillion of that is the discretionary budget. That's defense and non-defense. That is what the government could have some leeway over in a sort of easy is not the right word, but they could actually get into. And that's the entire military. That's every kind of social program, 0.7% of that is interest on the debt. So you can't really touch that unless you're talking about defaulting, which I don't think anyone is. And then the big one, as we all know, is the mandatory spending. That's $3.8 trillion. So that's roughly equally divided between things like Medicaid, Medicare, the health programs, Social Security, and other things like income security programs, veterans benefits, all these ones. So these are huge pieces, and anywhere, even if Musk could do a fraction of that, I think I push back. You're talking more than about people answering the phone at Social Security. You're talking about whether their checks are going to be the same size. So that's the level of what a $2 trillion cut would be, and that's why I think the opposition to this could grow in a hurry, depending on how hard they really try to go on this. And they're talking a big game. Ramaswamy has talked about eliminating 5 whole departments. That's what he promised during his campaign. So that's the back and forth there. But I agree. It gets cheers at Madison Square Garden to have this big cut, but people don't actually think about what's inside that.
I do want to get to this idea of this battle of the personalities. You have Elon Musk, obviously the EV king with Tesla, and then you have President-elect Trump, known for saying, look, I'm not a fan of these EV credits and subsidies. He's the drill baby drill president. So how do you think those two things mesh, Ben?
Yeah, it's going to be a real interesting question. I think you could sort of make a full-time beat over the next 4 years of sort of the Trump-Musk bromance, whatever you want to call it, frenemies, whatever they are, and whatever they're going to be in a few months. On the EV, the drilling in EV is a big piece of this. I think there's a real case to be made that Tesla is fine with a kind of fossil fuel focused agenda, including a rollback of some of the green energy credits. Musk has talked about this. He's kind of alluded to this. The idea that, if the startups around him, Tesla's an established EV company, if the startups around him get their kind of government funding cut off, they're in a lot of trouble. Tesla's fine. Tesla's a company. Tesla's not going anywhere. So I think Musk is making a kind of complex series of calculations here that he might be fine sort of, even though his background is the EV guy and the guy who actually believes in climate change, being sort of just fine with this administration, depending on how it goes on the fossil fuels and if it is a real drill by drill administration.
There's a large degree of irony here. Let's just make sure people understand what we're talking about. So these electric vehicle tax credits, this is actually the tax credit that goes to consumers. If you buy an electric vehicle under the Inflation Reduction Act from 22, but this has been in place going all the way back, I think, to Obama's stimulus law in 2010. These have been on the books one way or another for a very long period of time. At the maximum, you can get back $7,500 toward the cost of an electric vehicle. That's a lot of money. That can change your purchase decision, and that is only for certain vehicles. It depends on how much of that car is made in the United States. Then it goes down from there. You get lesser subsidies, and some states have subsidies. The irony here is that when Tesla was a startup, it relied on those EV tax credits because you could sell those in a marketplace, and because Tesla only made electric vehicles, they got certain credits that they were able to sell to other automakers as a different type of credit, and that was really important. Plus, those consumer credits really persuaded a lot of early adopters to buy a Tesla, and I think there are a lot of people early on who bought a Tesla who would not have bought it if not for that tax credit. So that helped Tesla become the leading electric vehicle company, and now they don't need it, and it's other startups that would move more. But Tesla absolutely needed those tax credits in the beginning. So broadening this out just a little bit, I was at an energy conference down in Dallas this week. This was not an energy conference with environmentalists and climate activists. It was mostly people who work in the oil and gas industry, representatives of ExxonMobil, BP, Down on Energy, people like that. A couple of things there. First of all, the oil and gas energy likes many of the things that are in the green energy bill because there's a huge set of tax breaks in there that it doesn't subsidize oil and gas, but it subsidizes other types of business that oil and gas companies want to get into. Carbon capture is a good example. Green hydrogen is another example. And the other takeaway for me was most of the analysts there are not expecting huge changes in the this green energy bill from 22. They do think the tax credits for electric vehicles are in danger, but aside from that, they think a lot of that stuff is going to stay, in large part because the beneficiaries, there are more of them in red states and counties than there are in blue states and counties.
Yeah.
It would certainly be fascinating to watch, as you said, watching all of this play out, and especially two very big personalities. And
Ben and Rick?
Strategy-wise. Ben and Rick and Trump and Musk.
Slightly lower net worth, but yeah.
Well, do stay with us. We have much more coming up on Capital Gains. Welcome back to Capital Gains. We're going to head now to a conversation that Rick and Ben had with Puck News founding partner Bill Cohan. Take a listen.
Joining us now is Bill Cohan. He's a founding partner at Puck News. He goes by the byline William D. Cohan. He's a longtime chronicler of Wall Street. Bill, thanks for joining us today. Lots to talk about.
Yeah, thanks for being here.
My pleasure.
You wrote recently on the speculation about who might become the Treasury Secretary. It seems like we've seen one of the leading candidates, the hedge fund magnate John Paulson, pull out. What is the handicapping at this point in your point of view?
Our friend Howard Lutnick on the transition committee for Trump is interested in maybe pulling a bit of a Dick Cheney here and conveying himself into the Treasury spot, or there's the Scott Bessent, if that's how you pronounce his name, who also is mentioned regularly.
Just tell our audience who these people are as you tick off the names.
Well, I mean, Howard, of course, is a long time Wall Street guy running Cantor Fitzgerald.
But big bond trading firm, right?
Yes, bond trading firm. Famously, 9/11, most of the firm was unfortunately wiped out, including, I believe, his brother. And he sort of picked up the firm from literally the ashes of 9/11 and rebuilt it. It's always been sort of a bit of a niche firm on Wall Street. But Howard is now positioning himself, to potentially be Treasury Secretary, which I think would be a bit of a surprising choice because he's not among those that are usually mentioned and not among those who are usually thought of as a Wall Street statesman. But Trump, of course, likes to do things a bit differently, as we've noticed. And Scott Bessent, who I know less well, but seems to be a sort of a bona fide conservative hedge fund manager trained by George Soros, which sort of gets maybe some of the people on the right a bit nervous about him. So we're basically talking about one hedge fund manager, one CEO of a bond trading firm that's big into crypto now, by the way. I think some of the ones that might be more typically considered, from a statesman-like point of view, would be people like, Steve Schwartzman, head of co-founder of Blackstone, or of course somebody like Gary Cohn, who was the number 2 at Goldman Sachs and was the national economic advisor during Trump 1 before he left after Charlottesville. I think Gary would, believe it or not, even though he's a Democrat, like to go back in, especially if he could be Treasury Secretary. That would be put him in the same conversation as former Goldman executives like Bob Rubin and Hank Paulson, who were Treasury Secretaries once upon a time. And I think Schwartzman, of course, has longed to be appointed Treasury Secretary, but I don't know if Trump will go for that.
Well, what's your sense of these statesmanship choices, as you mentioned, the Gary Cohns? I was really stunned to see Gary Cohn pop up in this thing, considering he was there the first time around, and you might not consider him a loyalist. How do you kind of game it out from the Trump side?
I was a little surprised to hear that Gary would be interested in going back in. My sense is he doesn't want to work at the White House, but if he could work, in the cabinet position outside the White House, i.e., like at Treasury or maybe the Fed. But it seems like Trump is clearly going with these loyalists, and I don't put either Schwartzman or Gary Cohn in those categories. Yes, they probably voted for him, or obviously Gary served in Trump 1, but I mean he seems to be going with the hardcore loyalists, and I don't see either Steve or Gary being in that category.
So I guess the question here, Bill, is how much does it matter whether the Treasury Secretary is a statesman? I guess we should say statesperson, but there are no women on this list at the moment, or statesman of Wall Street, or somebody more obscure. Does it make any difference?
I've wondered that lately because, obviously we had Janet Yellen as Treasury Secretary during the Biden administration. She had been Fed chairwoman, and eminently qualified. I'm sitting here thinking, what do Treasury Secretaries really do when there isn't, except for they run the Treasury, yes, but what do they really do in terms of inspiring confidence in the financial markets when there isn't a financial crisis? When there is a financial crisis, which we're probably due for, let's be honest, because it's been 16 years since the last one, and they occur once every 20 years or so on average. I mean, when there is a financial crisis, mean, having Hank Paulson as Treasury Secretary during the 2008 financial crisis, as the former CEO of Goldman Sachs, made a huge amount of difference. I mean, he probably saved the financial system along with, working with Ben Bernanke and Tim Geithner, right? And so knowing where the bodies were buried on Wall Street, understanding Wall Street, knowing who to call and when, knowing how to get people in rowing in the same direction was hugely important. I mean, if Paul O'Neill had still been Treasury Secretary during that crisis, I think it would have been a very different outcome. So it makes a big difference during a financial crisis. But, when the markets are sort of calm and robust as they've been for, 8 years now, and, seem to be going in that direction again under the prospect of Trump coming back, I'm not sure that it matters that there's a statesman.
Well, Steve Mnuchin did have a glamorous wife. Now, you would think normally
that his father, obviously, he was a Goldman partner, not a particularly well appreciated Goldman partner. His father, though, Robert Mnuchin was an all-star partner at Goldman Sachs back in the day during private partnership. So, he had the DNA, but he, I think his most famous moment was, when he and his wife went to Fort Knox and held up all the
with his glamorous wife. Ben, I know you have a serious question that's not about the wags of Treasury secretaries. Go ahead.
Yeah, I wanted to get your sense, Bill, on kind of the mood on Wall Street. We wrote about it recently and put your finger on something that I've been following closely too, which is the kind of, call it whatever you want about tariffs, but sort of hope casting. There's this level of optimism, and the question is whether Trump is serious about it, about actually going through with the tariffs that he talked about 5 times a day during the campaign. I guess I'm curious, kind of, to game out with me, what happens if Trump says in the coming weeks, I was serious about this, I want to do this, I'm going to do this, there's going to be tariffs, they're going to be big. How much does that kind of change the sort of semi-ebullient mood on Wall Street right now?
Yeah, I think the reality of Trump too will slowly seep into the markets, and it won't be nearly as euphoric as it's been for the past week. My sense is that these tariffs that he's been talking about ad nauseum all day, every day, now people are saying, well, that's just his negotiating position. That's a negotiating stance. And he's just doing that to, maybe potentially bully the Chinese and other people we do business with to, come out with a better, lower products or more access to their markets or whatever it is that he's really after with these tariffs. Or maybe he's trying to bully American companies, as he did into Trump 1, into not building plants overseas. I think we'll just have to, wait and see. I think, if he does many of the things he says he's going to do, I think the markets will react poorly to it, frankly, and some of this early euphoria will fade.
Bill, what do you think the Wall Street view, to the extent you can characterize it as a single thing, is toward Donald Trump, the person, the guy who had this role instigating January 6, 2021, the guy who is convicted of felonies, even if you don't think they were serious crimes, the guy who was facing serious criminal charges with regard to classified information. I mean, what is the level of unease on Wall Street with all of Trump's sort of personal issues, especially now that he's back in charge of government? Do you think people just don't care as long as taxes are low, or is there an unspoken concern?
I think that people are of two minds. First of all, I think most of the rank and file on Wall Street are Democratic voters. I think it's been that way for a while. So I think that, personally, I think a lot of people, not me personally, but I think people on Wall Street's personal view is that they don't really like the chaos. They don't like his behavior. They don't like what he did in Trump 1, and they certainly don't like what happened on January 6th, or the classified documents case, or being convicted of rape, being convicted of financial malfeasance. I don't think they like any of that. But what they do like is his policies that benefit their pocketbook. And I don't see, obviously, I guess now we'll get the extension of the Trump tax cuts, maybe a repeal of that SALT tax, as we were talking about before. I don't see the corporate tax rate being lowered below 21%. I just don't see literally how that could possibly happen, but it might. But I think what they do care about is a more amenable M&A environment, a more amenable deal environment, a less persnickety and vigilant Federal Trade Commission. I think, if the deal environment gets better, which is what Wall Street's all about, then Wall Street is happy. And I think most people now are predicting that under an FTC not run by Lena Khan and a SEC not run by Gary Gensler, it's going to be, a more robust deal environment. So from that perspective, investment bankers and traders and underwriters are, the IPO market might actually get going again. I think that makes investment bankers and bankers generally on Wall Street happy. But, I do have to just say that even under the Biden administration, when they were feeling somewhat forlorn about these things, somehow JP Morgan Chase managed to make $52 billion in net income kind of year after year. So something must have been happening positively in the banking environment during the Biden years for JP Morgan Chase to make all that much money year after year. So, maybe they want to make more now, I guess.
And somehow we had umpteen new stock market highs under Biden and still counting. But anyway, Bill Cohan, founding partner at Puck News. Great having you. Thanks for your time.
All right. Well, before we sign off for the day, we want to catch you up on what's been happening with Rick's Trump trade. So, Rick, get us up to speed.
Well, I know everybody in the world is familiar with my Trump trade, but in case anybody isn't, what I did before the election is just wade into DJT, the ticker symbol for Trump's company, Trump Media and Technology Group, and place a bet based on what the election outcome might be. So what I did was I bought a put option, which basically was a bet that the stock price would go down and I would be able to sell shares at a higher price than the market price at the time. So it looks like I should lose, and I will just so everybody knows, my bet expires on November 15th, the day we air this program at the market close. However, it's going to be close, and it shouldn't be that close. So when I bought this option, the DJT share price was close to $50. It was running up prior to the election. My bet was that it would fall below 25. Basically, a bet that Trump would lose. The opposite bet was that if Trump won, this stock would go probably well above $50. Well, we know Trump won, and guess what? The stock did not go up. DJT stock, Trump's company, actually went down by a considerable amount after Trump won. And I don't know why that is exactly. I'm not sure anybody's exactly why. But last check, it was trading at about $26. So I start to get my investment back once it hits 25. I start to earn back my initial if it goes below 25, and I break even at around 21. So I don't think that's going to happen. I think I'm going to lose my my money here, which was $390. But it's a lot closer than it should have been.
Bit of a roller coaster there. Rooting for you though, Rick. Of course, that does it for this episode of Capital Gains. A big thank you to Rick, Ben, and to Bill as well for being here. Thank you for joining us. And of course, make sure to like and subscribe so you can catch Capital Gains wherever you find good quality podcasts. That does it for us. We'll see you next time.